This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, March 26, 2018. Last week, commodity and economic reports were mixed. U.S. steel production rose to near a multi-year high on good demand, partly due to new steel tariffs are already having an effect on reducing imports. Oil fell 33 cents to $65.88, remaining near the multi-year high of a couple of months ago on good global demand and supply. U.S. oil production hit a new high of 10.41 million barrels per day. Great U.S. economic news. Iron ore fell $5.50 to $67.50, a new multi-month low with tariffs having the world nervous. Scrap steel heavy metal prices show the recent increase on this chart to $338 per gross ton on good demand and just okay supply. Upward price pressure remains, but it is not clear if it will have an effect next month. Hot-dip galvanized steel rose to a new multi-year high of $1,120 a ton on the coming tariffs and as production picks up in the U.S. Copper fell a big 14 cents to $2.99 as the world is becoming nervous about a damaging trade war. Copper's down 2 cents this morning to $2.97. The 5-year chart shows copper is about 28 cents off the multi-year high of late last year as markets remain nervous. Copper inventories were stable, remaining near multi-year highs. Aluminum was down 1.5 cents to 92.1 cents, now down 12 cents from the multi-year high of a few months ago. Aluminum LME inventories fell, remaining at very low levels on a good balance of supply and demand. U.S. steel stocks on Wall Street, such as Nucor and U.S. Steel, have lost all the increases they had after the U.S. announced the 25% tariffs on steel. Due to last week it was announced that countries representing 51% of the imports are now exempt. Note that China, which represents a mere 1.5% of imported steel into the U.S., still has the 25% tariffs. The U.S. announced additional tariffs on about $60 billion of Chinese items, and the Chinese announced counter tariffs on U.S. goods, including scrap aluminum. But the Chinese tariffs may be in response to the U.S. 25% steel and aluminum 10% tariffs of a number of weeks ago, and not on last week's new tariffs. This means more Chinese counter tariffs could be on their way. Importantly, though, both sides have agreed to talk in the last couple of days. The Federal Reserve raised its target rate for interest at the federal funds level by 1/4 point to 1.5 to 1.75% in line with market expectations and said the economic outlook has strengthened in recent months. They raised the growth rate forecast in 2018 from 2.5 points in December to 2.7 now, and increased the 2019 expectation from 2.1% to 2.4%. Note this is well below the 4% and 6% growth that the administration has said could happen with the new tax cuts. New orders for U.S. manufacturing durable goods rose 3.1% month over month in February, rebounding from a downwardly revised 3.5% drop in January and beating market expectations of 1.5% gain. It was the steepest increase in new orders since last June as demand for transportation equipment soared 7.1%. Just great news. U.S. manufacturing PMI edged up to 55.7% in March from 55.3% in February, beating market expectations of 55.5%, the fastest expansion in the manufacturing sector in 3 years, preliminary estimates showed. Stronger contributions came from employment, inventories, delivery times, while showing the strongest upturn in manufacturing operating conditions in 3 years. The stock market had its worst week since January 2016, dropping a huge 1,414 points to 23,533, wiping out trillions of dollars of value as many remain nervous about a trade war. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.